go, here we go. Yeah, at the top of the class on a roll. Hey, and it's time to run it up. Yeah, you know. Yeah, mask down, put the pedal to the floor. Yeah, on a roll, here we go, here we go.
What is going on, everybody? Welcome back to the channel. And in today's video, I want to take a look at the bear case for Bitcoin. But before we get into it, guys, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these deep dives into the charts or urgent market updates that we upload to the channel. Now, if you guys remember, a few weeks ago, I did upload a video taking a look at the possibility of the bottom of this bear market already being in at about $17,500. Now, in that video, we listed all of the evidence that would argue that the bottom could already be in for Bitcoin. And if you saw that video, you will know there's actually a pretty good amount of evidence suggesting that the bottom of this bear market is already in. But in today's video, as we've recently gotten some really bearish signs popping up on the higher time frames for Bitcoin, I just want to make a video arguing the bear case. So this is basically going to be the opposite of that video that we uploaded a few weeks ago. So that is the bull case, assuming the bottom is already in for this bear market. And today we're going to be taking a look at the bear case. What if the bottom isn't in? And if it is true, how low can we go, and what would be the most likely next stop for Bitcoin if we get that next leg down? So without further ado, let's go ahead and jump into the charts. I'm going to show you guys some of these bearish signals popping up on the higher time frames, as well as where I think price could be headed if we do indeed get that next leg down. Let's get into it. So here we are on the Bitcoin daily chart. So the first thing I want to do is go ahead and go over the bearish signals popping up on the higher time frames and some of the things that are making me remain a little bit bearish. So if we come over to the weekly chart, I want to go ahead and start off with our major bearish signal, and that is going to be the yellow X popping up on the weekly chart. Now, when you have something like a yellow X popping up on Market Cipher B, essentially what that indicates is manipulation, usually to the downside. So this could potentially play out in a very, very bearish manner. Now, the last time we got one of these signals or something similar would be the weekly blood diamond, which you see popped up right here. We saw this when it popped up. I was very worried at this point when we started printing this that it could be the start of a very big downfall for Bitcoin, and it wound up playing pretty beautifully. As you can see, this blood diamond did bring us down about 60%. Now, we always talk about these bearish signals on the higher time frames, like the weekly, can be super, super powerful. Now, you know, when this popped up, we were kind of saying like this could be the start of the big drop or, you know, the beginning of the serious bear market for Bitcoin. And we did see exactly that. Number one, you don't want to put too much weight on any one indicator. However, you can't ignore when bearish signals like this pop up on such a high time frame, because when they pop up on the higher time frames, typically they play out in a very big way. So now, after we've seen this blood diamond play out, we are seeing this yellow X pop up. And if you guys watch the channel, you know what these yellow X's are capable of on all different time frames. They typically are very reliable, and especially when they pop up like something on the weekly, which has actually never happened before. So this could potentially be very, very bearish. Now, again, you want to realize that, you know, this doesn't mean that we're 100% going to make lower lows. This is why you want to build a list of evidence, right? You don't just want to be basing this off of one indicator. However, if we see this yellow X play out like they typically do, we could be in for a very bumpy ride. Now, if we take a look at the 7-day time frame, yes, the weekly and the 7-day are technically different time frames. As you can see, we've printed a yellow X on the 7-day before, and if you measure this out, you can see that, you know, this yellow X brought us down about between 41 and 42%. Now, if we see this yellow X play out in the same way, or at least similarly to the previous yellow X on the 7-day, and we got about a 41 or 42% drop, that would bring us to about 13.6. And this is going to make a lot of sense in just a second when we take a deeper look into this. But that's kind of the range that we would wind up looking at if we see this yellow X play out like the previous one, right? So we don't have one to base off of on the weekly, but we can look at that 7-day to see how these yellow X's react on the higher time frames. It would bring us down to about 13.6, which is a very interesting number, and we're going to find out why in just a second. But we do also have some other things that are making me remain pretty bearish on Bitcoin until these flip around. One of those things is going to be the 200-week moving average. Now, as you guys can see, we were talking about this before it happened, but, obviously, we did crack through that 200-week moving average, and then we started to get hopeful over here because we started to peak above it. We started getting wicks above it. Then we started closing above it, but now we have essentially bearishly rejected off that 200-week moving average. Now, this is very bearish in my opinion, and when you have something like this happening on top of your yellow X printing, this just adds insult to injury here, because if you guys watch the channel, anytime we're looking at any time frame or any kind of pattern breakdown, or anytime we lose a level, we look for price to lose a level, bearishly retest, and if you can get the confirmation of a blood diamond or a yellow X as you bearishly retest, typically that retest entry into a short position has a pretty high win rate, especially when paired with the confirmation of a bearish signal on market cipher A. And just in general, bearishly retesting that 200-week moving average and getting a rejection down off of it is just generally bearish in my opinion. So until we flip this 200-week moving average, I would remain either bearish or just neutral on Bitcoin. I think as long as we remain under this 200-week moving average, we are either going to continually hit our head on it and continue down, or maybe we just kind of range sideways here. That is another option. But generally, this is some really bearish stuff, guys. That yellow X on the weekly is not a good look, especially when we are now back below that 200-week moving average. Now, another thing that can kind of point to the fact that the bottom may not be in. Now, there are some caveats here, but if you're using history as part of your research when you're looking at the charts, which does actually wind up playing out pretty well, as you guys know, we have seen these cycles at least repeat each other in some fashion as far as timing and percentages. Now, real quick, I do just want to pull up my cycle chart, which I do show in our other video, which is arguing that the bottom is already in. I do just want to pull this up because there are some things that point to the fact that maybe the bottom is not in, right? And one of those things is, as you can see in every bear market, if you come over here, you can kind of see if you measure from the all-time high all the way to the bottom. In this cycle, we came down about 86% from the top to the bottom. Now, moving on to the 2017 bull market, from the very, very peak to the very, very bottom, we came down about 84%. 86% in the 2013-2014 cycle, and then in the 2017 cycle, we came down 84%, so 2% less. And when you move on to our current cycle, you can see that if you measure from the top to the actual bottom of this wick, we are only down about 74%. And if you measure from the all-time high right here all the way to our bottom, you can see that we've actually only come down about 74%. So only being down 74% does seem a little bit too light of a bear market for me. You would expect, a lot of people are expecting an 85% correction. Now, as the cycles go on, it's very likely that the corrections become less and less due to the market maturing or logarithmic regression. So as more money enters into the space, you get less explosive moves to the upside and less explosive moves to the downside. So I would argue that it is likely that we would see a little bit less of a correction in this bear market, but 74% just doesn't seem far enough down. So you have the yellow X on the weekly chart as well as the 7-day chart. This is pretty bearish. We're also below the 200-week moving average, and it does look like we broke below it, bearishly retested, and then got that yellow X as a confirmation, which could mean we are headed lower. Now, on top of that, when you switch over to regular candles, you can see your 5-day actually had a yellow X up here, which was a good way to predict this move down. And if you come over here to your 4-day, you can see you are starting to print a blood diamond, which typically plays out pretty brutally, especially on the 4-day time frame. You can see this last one we had up here did bring us down about 52%, right? So we are starting to see these signals pop up on the higher time frames, which is making me feel generally bearish. Now, if we see this stuff play out and we see that yellow X play out to the tune of 41%, like that previous one on the 7-day chart, where are we headed? Where would be the next likely stop down? And For me, that level is going to be right about here, between about $14,000 and $12,000. Now, I am just going to draw a box there to represent that next range I think we're likely to visit if we break that low of 17,500. Now, this is a very interesting area for many reasons. Number one, it brings us right down to this structural support here at about 14K, which was the peak of our little fake out 2019 bull run that we had. And we just have technical support here. So it makes sense when looking at the charts, as well as another reason that this area is very attractive to me is that if you measure from the all-time high all the way down to this box, it brings you into that range of about an 81 to 82% drop from the top, which in my opinion makes a lot more sense to be the bottom of this bear market, right? Because again, 2013, 2014, from the top to the bottom, we saw an 86% correction. Then in 2017, we saw an 84% correction. If you average that out, you would be expecting about an 82-ish% correction. And if we get this move down, it would bring us down to almost 82% exactly. And if you measure from the top of where this yellow X was printing to about 41%, you can see it brings you right down to that same exact level. So these are some of the things that make this area very, very attractive. So you just have general technical support. It also gives you that 80-ish% correction, which again makes a little more sense in my mind. You could argue that we never really saw a crazy blow off top or max euphoria. So maybe we don't come down for an 80-something% correction. But again, with the way that the macro is looking, there could be reason for us to have a little bit more pain in store for us in the crypto markets. So here is actually a scenario that I think could make a lot of sense for the bottom. If you do get that next leg down to about 14K and start to get a bounce, you would start to develop a serious bullish divergence here on the weekly time frame, which could be massive. As your price comes down to 14K, assuming that your momentum wave comes down, maybe it crosses that -60 line, but does not go lower than your previous wave, you would be putting in that bullish divergence, which in my opinion would make a lot of sense to mark the bottom, because not only would you have a bullish divergence on the weekly, which is super strong, but you would also print another big green dot down here on market cipher B, giving you that double green dot bottom, similar to how we had in 2015. Because as you guys know, in 2017, we had one weekly green dot mark the bottom, but in 2013, 2014, and I guess 2015, we had two green dots pop up and mark the bottom. And there are a lot of things that look more similar between this cycle and 2013, 2014, rather than 2017. So it does look like we could wind up seeing something play out similarly to the 2013, 2014 cycle. But this is just one of the ways that I can kind of see this. If we get that next leg down, this would make a lot of sense for a bottom. You come down to that technical support, you get the bullish divergence, you get the double green dots. And at that point, hopefully your money flow starts to curve back up, because this is just another bearish sign here that you're getting that yellow X with the red dot on the weekly, and your money flow is coming out. So hopefully you can get that money flow to round off there. So just another reason that this drop down to about 14 to 12K could make a lot of sense. It gives you that 82% correction. It allows you to create bullish divergence on the weekly, and it could potentially get you that second green dot, which has marked the bottom in the past. Now, when we get down there, we would have to reassess the situation and take in the new data that we're being fed on the charts, because obviously if we get down there and things still look like garbage, we would have to continue to assume that we could potentially come lower. But again, there are a lot of things here arguing that that would be a nice bottom for the Bitcoin bear market, at least in this cycle. The reason why I would have a lot of confidence in this being the bottom is because a bullish divergence on the weekly would be extremely, extremely strong. The last time we had a divergence on the weekly would be this bearish divergence that we put in here. As you can see, we had higher highs being created on your price action as you had your lower highs on market cipher B. You get that bearish divergence and boom, it just absolutely pours out purple candles. Obviously, if we had a bullish divergence forming, we would see the opposite happen, assuming it plays out. Now, I know this video is the case for lower lows incoming. However, I do just want to bring up one other really important level that I'm watching, and just kind of another scenario I can see playing out here if we don't make lower lows. I do think another likely case is that we could work our way down here to the 786 Fibonacci level for a double bottom, right? Giving us that beautiful W double bottom reversal pattern before finding a bottom. And again, I want to be clear, I don't think we would launch to all-time highs from here. I think it would probably more likely wind up being something like this, where you get the W and then we just kind of go sideways. But essentially the bottom would have already been in at that point. But we could potentially come down to that 786 for a double bottom. Now, I do want to be clear. I'm not saying we're 100% making lower lows. I'm just objectively arguing that there is a case to be made for that situation. Some things that would argue against that is that we never saw an extreme blow off top, so we might not see that full painful bear market. And if you watch that last video arguing that the bottom was already in, there's a whole list of evidence there arguing why the bottom could potentially already be in. So there's a case for both sides. I just wanted to show both ends of the stick here, and definitely let me know in the comments down below, what do you think is more likely to happen? Do you think the bottom is already in, or do you think we're going to see this yellow X play out and give us those lower lows? With all that being said, guys, I think that's all I got for this video. I'll see you in the next one. Frankie Candles out.
Like you killed